Welcome to Financial Freedom for All, where we help you master your money and live your dream, one episode at a time. Hi, my name's Steve Jenkins, Senior National Sales Director at Genistar, and we're here today to talk about tax tips for entrepreneurs. And my special guest today is Rob Sherwood. Good afternoon, Rob. How are you doing?
I'm doing fine. It's nice to be here.
Yeah, very good. So how long have we known each other now, Rob?
I would say at least 12 years we've been looking after your tax affairs, starting much lower level than they are now. So it's nice to follow your progress.
Yeah. Well, and thank you for looking after me for all that time.
Okay.
Yeah. Well, let's kick things off with a question. So, Rob, can you share some core principles from your ebook that we're going to be talking about today that entrepreneurs should follow and use as a guide with regards to their taxes?
Okay, yes. The first ebook we produced was based on core principles for being self-employed, basically. And I could pick out three things from that book, which were very relevant. One is actually to keep some kind of records from day one, even if it's just making sure you keep your invoices, receipts, and so forth. For later on, that can be put into some kind of a system, which it would be, but make sure you do keep the receipts as and when they arise. The second thing is I definitely try and open a separate bank account for the business, because it's much easier to have things in a separate account, not mixed up with all personal stuff and so forth and so on. I mean, later on, when you have a limited company, when you're at that level, then you have to have obviously separate accounts. But at the beginning, I mean, it needn't be, I mean, I know banks will probably want to charge you something. So it needs to be designated a business account, but just a separate account. And the third thing is have in the back of your mind, setting aside a percentage of your earnings for future tax payments. Anywhere between 10 and 15%, I would suggest you put aside so that you know when the time comes, you will have the money to pay the tax. We have many occasions when we report to our clients what the tax bill is. Oh my God, where am I going to find that from? Had they from the word go kept proper putting aside, that's the way.
Yeah, 10, 15% is very
10 to 15%,
yeah. Very good. Okay, and what are give us some common pitfalls that most entrepreneurs fall into in their early days?
I think the classic one is head in the sand.
Yes.
They sort of kind of carry on. The point really is we've always found that building a business is much more exciting than dealing with tax and accounts, which is really why I set up DSL in the first place. And so they will go and do that, and they will forget about the tax deadlines, and suddenly Christmas is over, January 31st is looming, and they've done nothing about anything. So, that's the first thing, is to make sure that they are mindful of the due dates. So,
okay, very good. And so let's talk about what the tax advantages are for people who are self-employed, work from home, kind of entrepreneurs. What are the tax advantages?
Yes, well, I mean, in the second ebook you can find, I draw a great difference between the average person who is on PAYE. In other words, he's got a salary, it's taxed at source, the government can collect it, and there's no deductions from that, as opposed to being a self-employed person working from home, when you have a whole host of perfectly legitimate expenses you can claim for running your business. The very fact you're working from home, you're entitled to make a proportionate claim on things like rent, rates, electricity bills, all that kind of stuff, all the running costs of a home. You can claim a fair proportion of those. And then you go into the normal expenses, traveling costs, running a car, telephone, advertising, all those sort of things that would occur to you when you're running your own business. And as I said, if you were employed in a job and you tried to make a claim for the sort of things you do incur, you would actually get probably an allowance of £5 or £6 a week, and that's max.
Yeah, so it's things that we ordinarily spend money on, that we don't realize when we're self-employed, they are tax deductible.
Yeah.
Like your mobile phone is a big one.
Absolutely, yes.
Internet cost. Even your service charge on your flat, if you live in a flat.
Yes.
Part
yes.
of that. And the way I've always worked it out, correct me if I'm wrong, is that if you've got 5 rooms and you use one of those rooms for your desk and to run your business from, that's 1/5 or 20% of your
fair enough
utilities and all of that.
Absolutely, that's exactly how it works. Yeah, we used to have it's made easier now by simply taking that one room idea out of 5. We used to have an idea with the revenue that you would exclude kitchens and dining rooms and so forth. You would add up the number of rooms, like a living room, add up the bedrooms and so forth, and then work on that principle. But having one room out of 5 is probably an easier way of doing it. But that's absolutely right, and that applies to all the home running costs.
Okay. So I've got some stats here. Everyone loves a stat, don't they? In 2022, 50% of small businesses reported struggling with tax compliance due to poor record keeping and insufficient understanding of allowable deductions.
Yes.
Let's talk a little bit about that, shall we? So that's half of every self-employed person.
Yeah.
Yeah. So what can people do to kind of mitigate that, get around that?
Well, I suppose I could say they could look at our e-books, but it's true. Yeah. I mean, there's loads of publications around now to highlight the fact. I mean, we just had a change of government, haven't we?
Yeah.
And one of the things they are ever so keen to do is to promote growth. I mean, so in other words, small entrepreneurs starting a new business, they should be getting all kinds of encouragement to make that grow. And then it's common sense in a sense. I mean, you're in a financially orientated industry, aren't you, in Genistar? So the income is going to come from selling products and so forth and so on, but you're working from home. And it's common sense then you think about, what am I doing at home in order to run my office from there and so forth. So you go back to the idea of expenses for running a house, you're traveling, all of these things that you find that... and you're entertaining a bit too. I mean, entertainment is a bit of a grey area. Let's just be clear about that. But I always say that if you're meeting clients or potential business clients, and you're going to buy them a coffee and all that kind of stuff, that's all part of the claim that you're entitled to make.
Yeah.
But what goes with that is making sure you highlight on the little receipt you get or whatever it is, mark what it is. It's not just a receipt for you having a coffee with a pal. It's a business meeting, isn't it?
Yeah, it is. I mean, in the early days, I built my business from a coffee shop.
Of course you did.
That's how I did it.
Yes.
So yeah. And
if you go to any coffee shop now, loads of people with their laptops, aren't they, on the table? But and they're there for either the day or not, but during that day they're going to incur expenses, and that's part of their office costs.
Yeah. Everyone wants to work from home, but we end up going to a coffee shop.
Absolutely, I know.
Yeah. So something I've learned, which may help the viewers, along the 50% of people who are just struggling with putting it all together, is that I'll be transparent. Most of the years in sending my accounts to you, they've always been lastminute.com. But in those few years, Rob, where you've encouraged me to get it in earlier, and you give me a financial incentive for doing it earlier, which is very clever. Yeah. What I've found is I find myself at the end of every month looking at my receipts, looking at my bank accounts, and just looking at those, I don't know, 2-3 dozen transactions that may be applicable. And I find that the years that I've done that, when I just do it every month, that there's no stress at the end of the year.
Peace of mind, isn't it?
Throughout the whole year.
Yes, absolutely. I mean, and there's no need not to do that. I mean, it's got an easy thing to have an hour or something at the end of every month. Yeah. Just to see. And I mean, you get used to, in the old days, you get these concertina files, and you would sort of put months' receipts into each pocket. Yeah. I mean,
I used to use envelopes.
It's basic stuff. But to be honest with you, with people starting off with a brand new business, if they take these on board, life will be so much easier.
I've also found using digital banking a lot easier now as well, because they give you the option to separate your expenses into different pots and and run different accounts, personal one, a business one, a savings one, etc., all in the same app. And
that's why I said it's important to have a business or a bank account set aside just for the business as soon as that can be achieved.
It's very smart.
As I said, it needn't be designated a business account, as long as it's a separate account, and that's where your business figures and income expenditure sit.
Yeah, absolutely. Okay, Rob, so it's interesting to me that the number of self-employed individuals in the UK has risen now to between 4 and 5 million people who are classified as self-employed, which is steady growth. I mean, you'll have seen this in your business with your clients that you've taken on. Since post-pandemic, that has been a huge rise in self-employed people.
It is. I mean, I think the pandemic itself, and everybody was forced to work from home, actually sparked off quite a rise. And because people had to have something to do, the incomes were being seriously affected, and so forth. And in the 12 years we've looked after your affairs, I mean, we've seen the growth there, Steve. So obviously you've been aware that you're contributing to the growth in the self-employed figures. And how have you done that? How have you managed to achieve that?
Well, during pandemic, as you've just said, a lot of people were at home and looking for something to do, and we did have a spike in the recruitment of new people into Genistar. That's for sure, and I guess so did all similar.
And it's the relevance
businesses.
Because you haven't got products, you've got financial services, but now the relevance of mortgages and life policies and pensions, and it's all very in an area of natural growth, isn't it? I guess.
Yeah, for sure. I mean, there are more financial education, which what we teach is expanding, and people are hungry for it more so than 30 years ago when I started in the industry. That's for sure. Especially the younger generations, they've got an appetite to learn more about it, and I think that goes hand in hand with the entrepreneurial spirit. I mean, if you look at 100 years ago in this country, it was difficult to be self-employed unless you worked on the land or you had a trade.
True.
But now, because of the explosion of the internet and the World Wide Web, we have unlimited numbers of opportunities for people to start their own business, which I think is very, very exciting for new generations.
For people like you, it's always been the same in the direct selling industry. The bulk of your income comes from overrides on your team's performance. And so if you set out the bigger the team you create, the bigger the override and the bigger your own income at the end of the day.
Yeah. And bigger the impact that it has in the communities with the financial education side of things, for sure. And it's interesting. So the need for taxation understanding and education in that area must have grown with DSL, your company.
Yes, absolutely. Well, when we started, we found that there wasn't any tax advice or accounting expertise for anybody working in the direct selling industry back in 27 years ago, whenever we started. Yeah. That was so interesting. And then so we created a business model, if you like. Yeah. Other accountants obviously have followed in and so forth and so on as the whole thing grew. But yes, it was and so we've seen the growth in the industry alongside the growth in our own business. And then we have individual clients like yourself, Steve, whose progress we love to see, from your accounts in 2012 don't bear much resemblance to those in 2024, So that's it's nice.
Yeah. Yeah, and so this whole area of tax planning, how important is it for someone who starting out in business now to kind of start looking at that and understanding it in anticipation of what's going to happen in the future, like you did with me 12 years ago, got me thinking about what it's going to look like in the future?
The one thing I'd like to say at the beginning, and I'll just read a paragraph from one of my books.
Yeah, please do.
I don't know how many viewers will remember Maggie Thatcher, who was
I do.
a big Tory Prime Minister in the late 80s, early 90s. And I'll read this out to you. I was saying, do you remember PM Maggie Thatcher? Well, back in 1988, she wanted to encourage entrepreneurs. So she introduced the following tax arrangements. During the first 4 years of a new business, the taxpayer can offset any self-employed loss, in other words, more expenses than income, against other forms of income which have been taxed at source. In other words, a salary with PAYE tax in the same or previous year. So in other words, you get a business, you start off, inevitably, you're going to have to find the income stream by going out and talking to people and building up a client base. But from day one, you can claim expenses we've already been across, working from home, all that kind of stuff. And so it's very easy in the first couple of years or so to have more expenses than income. And at the same time, likelihood in many cases, people have kept a job going. They're employed and they're paying PAYE tax. So you take your self-employed loss, offset it against the PAYE tax you've paid, and you get a refund. We used to claim something like £1 million a year in total for our client base. And I always wondered, we went in to get a knock on the door one day from HMRC saying, what the hell is going on? But that was it, purely using the rules as they apply. Nothing fishy about it, legal about it.
Yeah.
What stopped a lot of that was in 2017, HMRC introduced a new rule which said that if your turnover did not exceed £1,000 in a year, you did not then have to register as being self-employed. So a lot of people breathe a huge sigh of relief and say, that means I haven't got to do a tax return. However, what kind of annoyed me a bit was what the revenue had succeeded in doing was to cut down the number of tax refunds.
Yeah.
But, so all these things, when you set off in the business and you're planning for the future, there are things that you can almost immediately benefit from by being self-employed.
So what you're saying is, see if I can clarify things here. So I set up my home-based business. I register with the Inland Revenue.
Yep.
Let's say for whatever reason life gets in the way, and I'm turning up for training. I'm getting the education. I'm doing the studying. I'm doing a little bit of work here and there. And let's say in my first full year, I only earn £1,000, or less, or £500 or £250. What I can do is I can fill in a tax return. And let's say my expenses are £2,000, my business has made a loss of £1,000.
Yeah.
So I can then put that £1,000 in a tax return as a loss. And if I'm a basic rate taxpayer, I get £200 back.
Correct.
Wow.
Now, the only thing that you've got to be sure of is that the expenses are all justifiable as business costs.
Yeah.
But assuming that to be the case, and there's no reason on earth why they shouldn't be, because you'll be spending a lot of time creating a business, whilst at the same time you're obviously incurring these day-to-day expenses. Yeah, that's right. Exactly how it works.
Yeah. So how many people would you estimate have set themselves up in business, self-employed, working from home, and not made that?
Now, because of the £1,000 rule, much to my annoyance, it has cut down. Many people, they just decide, oh, that means that's great. I needn't worry about a tax return.
So the Inland Revenue were very tactical, you think, in doing that?
I think it's very tactical by HMRC.
Very clever of them to work that out.
Yeah.
Okay. So are there any other tax tips that come to mind that we can, specifically people who are starting or who have started in the last year?
I mean, there are some things that are peculiar to the direct selling industry, if you like.
Yeah.
For instance, if you want to self-improve your life and all that kind of stuff, and you go on courses that are designed to do that. They're not specific business courses, but they are designed to improve your lifestyle, the way you go about things, which in effect will then improve your business. Those course fees can be claimed against your profits for tax purposes. That's quite a big area, actually. And not only going on courses, but reading buying books and tapes and all those sort of things.
Yeah.
Self-improvement is quite a big area, which is very much part and parcel of the direct selling industry. So that's an area. And the other things, like if you're running a a team like you are, Steve, you will want to encourage your team to succeed. And so you will come up with all sorts of incentives and weekends away and bottles of champagne based on the fact that they will then produce the results you're looking for. So that's another area of unusual expenses that you're entitled to claim.
Yeah, very good. Yeah, I've done a lot of that, as you know.
Of course you do.
Yeah.
I mean, at the end of the day, as I said before, the bulk of your earnings will come not from doing your own particular individual client work, but from an override on your team's performance. So that's what you want to build, isn't it?
Yeah. Now, these ebooks that you're referring to, so the viewers can know, you can get access to these in the description below on the screen, or just wait for the podcast to end and press the button, and you'll get access to those ebooks. Where did the idea of that come from?
Well, funnily enough, the idea of these ebooks actually came from my dear son Mark,
Right.
who is a sales and marketing background, and he'd come back from the States and he had all the ideas to do this kind of stuff, and he decided that you should have we actually produced hard copies first, but then in the modern day and age, hard copy is not really what you want to have for ease of distribution and so forth, and that for changing things and updating things, the ebook version is so much easier to work with. And so yes, we had this basic one to set off with, which was all about the principles of becoming self-employed for the first time. And then during COVID, it was actually, I decided to write a book on the benefits of having your own business. And not only was this an idea of having a business to create income for you, but it did a number of things besides, which I will tell you about.
Yeah, go on.
I listed them out. Basically, it was a second source of income. Yeah, you might have a job when you start off, but you would replace that with a successful direct selling business like Genistar in due course, and forget the working for somebody else, basically. And then, because of the tax arrangements for working from home, you would get a better end result from that. So that was another good reason to having your own business. And then you were going to build for future and in retirement. I mean, pensions are fine, of course they are, but to have a secondary income, adding to income in retirement. And then finally, there's sort of the idea about a better lifestyle, time with the family, working from home, all of these things really help the way you live.
Yeah.
And so this book was all about not only teaching you all the expense schedule you can make, all that stuff, but giving you reasons for having your own kind of self-employed business.
That's right. Yeah, I can concur. Very good. So let's talk a little bit about the deadline coming up on the 31st of January.
Right.
Okay. So I would imagine this is a busy time of year for you.
Yeah. Yes.
According to the latest stats, around 1 million people missed the deadline of the 31st of January. That was last year in 2023, around 1 million. And what consequences are there for that?
£100 penalty and interest.
Right.
And interest is no longer cheap. It used to be cheap.
Yeah.
I think it's at least 5% now that you would get charged on top of the £100. And the longer you leave it after the 31st of January, the greater the interest bill. I mean, it's easy money for the revenue because it's there for the taking. And once you've registered, you get a warning from HMRC,
right,
that with a deadline date. And so, yes, I mean, so it comes back to this thing we talked about earlier, getting your house in order throughout the year. So when it comes to January, there isn't a panic.
Yeah.
Because the other thing about that is that if you go to an accountant with about 2 weeks to go before the end of January, the odds are he probably hasn't the time to file it on time because he's so busy doing other people's who have been there correctly. So
that's why you offer an incentive of reduced fees.
Well, what we actually do, we charge a sort of penalty.
Yeah.
For people who let us have their paperwork after end of October.
I've had that.
Yeah, and it works. It does help.
Yeah. Okay. So what about people who not only have missed a deadline, but they've started in business, working from home, second income, self-employed, and they haven't got round to registering with the Inland Revenue. What consequences come then?
Yes, the registration dates are that you should register by the 5th of October following the end of the tax year in which you started your business.
Right.
The tax year runs from the 6th of April in one year to the 5th of April in the other. So if you started your business at the 6th of April 2023 and you finished it at the 31st of March, 5th of April 2024, you should have registered that by the 5th of October 2024. Okay. So you've got a fair bit of time after the end of the tax year. Now, the consequences of not registering and then later finding that you've got to catch up, my experience has been that as long as there's little or no profit involved in that business, fine. But if really you have actually succeeded in making a decent profit, there's no reason why the revenue won't penalise you, actually, with the £100 penalty plus interest. So given the fact that there's a fair bit of time to do so, it's not something you should it's something you should try and avoid, obviously.
Yeah, absolutely. Good. So the message is to the viewers, if you haven't done it yet, make sure you do it as quickly as possible before they find out.
Absolutely. And yes, that's a very good point, that it's far better to get to HMRC before they get to you.
Yes.
By some fluke. I mean, I don't know how they would know, but they might find a way. But you go to them first and say, put your hand up. Sorry, this is what I should have sent you before.
Yeah, very good. This podcast has been provided for you by Genistar, financial education company providing financial freedom for all.
The podcast has also been sponsored by DSL Accounting. We act for the whole of the direct selling industry, tax advice and accounts. And our motto is tax without tears. Oh yes, Steve, yeah. Now you've mentored lots of entrepreneurs in Genistar during your 12 years that we've known you, if not beyond that. How do you help them to manage their tax affairs and keep things in order?
Yeah. Well, we mentioned it every available opportunity in our training sessions. It gets asked as it happens as a question quite often. So it's always in the conscious, and it's out there up front. And every year, at our convention, we run a class on it usually. But more specifically, when I particularly see someone rising through the ranks, whose obviously incomes, because all our incomes are transparent, when we see someone's income starting to go through the roof, I usually come around them and say, right, now's the time to start thinking about planning for your taxes. But a few tips that I've used is that it took me a long time, Rob, to go from paper diary to an electronic diary.
Yes.
But one of the great things about the electronic diary, which I'm now fully on board with, I'm 2 years now without a paper diary. And I finally kind of got myself off it. It was like an addiction almost. But you can automate key events for for hundreds of years if you wanted to.
Yes.
So my electronic diary tells me every quarter it reminds me of my accounts pending. Now, usually the first alert tells me one quarter's gone, and I kind of go, oh, no, it's okay, no problem. The second quarter comes, and I go, oh, I better do some. And that's what's happened this year. I've kind of I've got my expenses in order.
Yep.
The third quarter's like, oh, scary time now. So now all of a sudden I'm trying to put it all together, and by Christmas Day you will be receiving the finished article.
Yeah.
So that's how it works in practice. In theory, I would suggest to everyone, if they can, is at the end of every month, just block half an hour out of your diary, look at your bank account, look at your receipts, and almost file those accounts to yourself in an envelope or some format that suits you, so that it takes the pressure away.
It's so simple, isn't it?
In theory, yeah.
In theory, I know. But yes, I mean, I couldn't agree with you more. And even if you haven't got an electronic diary, you put it in your handwritten diary, don't you?
You should do,
At the very least, you should put something in prior to Christmas, about the end of January, you must have your affairs sorted out by your accountant. Yeah, no, that's absolutely fine.
Yeah. It's just getting those disciplines in place, isn't it? Being serious for a second. If you're serious about building a big business, then you've got to be serious about all the different facets of it. And becoming an entrepreneur, part of that is managing your taxes, managing the future planning of your finances. Because, I mean, it's amazing. You know, I've done many things wrong in my business. You know, you try, fail, and adjust all your whole career, don't you? But I've been very fortunate. I've only ever had 3 accountants in 37 years, and you're one of those for 12. I was very lucky. The very first accountant I ever, very similar character to you, actually. I suppose all accountants are similar in personality. He got me right from the day go, and it's just been one of those things that I've never really had any challenges with. So that's worked well.
Oh, good. I mean, the classic phrase, isn't it, is failing to plan is planning to fail.
That's right.
And if you bear that in mind, and the fact that we see one of the main reasons why people in direct selling give up after a year or two is because they haven't really thought through the whole structure about, okay, I'm in business, I've got to have accounts, I've got to pay tax, and they panic, and the whole thing becomes just too much for them. But if they sit down at the beginning and just take on board what they have to do, it's not that much at the beginning. It grows slowly, but then they don't have that nightmare of, I can't cope.
Yeah. It's almost like when you first, it seems it's bigger than it is in their head.
Yeah.
It really isn't that big a deal, particularly if you get someone good like yourself who's there constantly, pestering us to get it done.
Yeah.
You know, and they're in the background for questions. I mean, that's the big thing I've had from you and my first client. Not very much in my middle one, to be honest. But the two of you have always been there on the end of a phone with either yourself or your staff that can really help. And that makes a big difference.
You guys are 24/7, aren't you? And I like to be myself. I have no problem at all with clients calling me weekends or whatever. That's not an issue.
Yeah, very good. So, Rob, let's talk about making tax digital, or MTD for short. When did the Inland Revenue first start?
Ages ago. I seem to remember it was 2017 or 2018. They were talking about it, and they were going to introducing it over a period of time. Initially, it was for people who were at the VAT threshold, which of course doesn't apply in your case. And then it kind of disappeared, and COVID came along, and it was all delayed, and so forth and so on. But it's now reappeared again, and we've got new targets, haven't we, to achieve this?
Yeah, by 2026. All self-employed businesses and landlords earning over 50,000 annually, and I believe that's turnover.
That's income turnover, yes.
Yeah, so before tax money, must comply with MTD requiring digital submissions of tax returns. Now, the good news is you've done all of that for your clients. I've had the benefit of that. It's wonderfully been put together. And I have to say, the Inland Revenue's back office system is usable now.
Yes.
It's not too bad at all. So what do entrepreneurs and home-based business people need to understand and know about this, and how can they prepare better for it?
Well, I mean, I would have said, in particular with Genistar in mind, because you are in the financial services industry, it's kind of common sense that you should be taking the lead on anything financial. So going... digitizing your records and so forth would make a lot of sense. We work with companies where there's a product that people are selling in a very small way, so that it really doesn't apply to them. But I think part of the financial approach that you have in Genistar, it would make the whole thing much better were you to adopt this university. And it's not that difficult, actually. Anybody can not talk to my office and get some advice on how they go about it and what systems they should be using.
Absolutely. I remember going through that with one of your staff
Yeah.
a few years ago, and my age group naturally is reluctant to to get into the pressing buttons side of things. But now I look back and think, wow, I'm glad I pushed through.
Yeah.
On a wider scale, Robert, we're in a digital age, and I can remember the days when we used to use paper and pen to fill out applications for our clients.
Yeah.
And it's morphed now from that going into the post and being delivered. Then it went to taking these bits of paper and scanning it as a PDF instead of putting it in the post. And then now it's just online, and it's all the computers.
In the clouds.
That's it. It's up in the cloud. So we've got to adapt. We've got to become flexible. And I would suggest to anyone who's struggling with IT, go onto YouTube, and there's plenty of free stuff on there that will teach us all to be better with, to become more digitalized and understand. I think most people now use digital banking.
Yes.
That has been a great saver for me since I moved over to a digital bank. I would say 4.5 years ago, because now you can press a button and it turns you can put in the date, April the 5th round to April the 4th or whatever the date is, and it sends you a spreadsheet with all your expenses in there. Yeah. So it just takes away all of that pain that we used to have to do.
Absolutely.
Previously.
It's kind of it's just going through the barrier, isn't it? About being a bit scared to being confident.
Yeah.
And that's, once you've done that, you realize afterwards, the advantages of having achieved that. Yeah, certainly.
Yeah. So what other things can people do to prepare themselves for 2000? Is that January 26 or is it? Or is it?
Probably. Probably. I don't know what date in January, but unless it's the tax year.
Probably,
April.
So we got a year, maybe a year and a half max to get ourselves ready for that.
Yes. And that's earning, that's whose income, not whose profit, whose income is over 50,000.
Yeah, well, we've got part-time people doing that.
Yes, and nowadays in direct selling and in Genistar, I'm quite sure that would apply to quite a lot of people.
Yeah, for sure. So we've just got to work it out. Now, the other thing that we're doing in Genistar, to help our people, is we've got a couple of sessions that are going to be scheduled between now and April to help people get their tax returns in on time.
Okay.
And to get because the way it works with us is we get our annual statement in around about May.
Yep.
May, June time is when it's finalized.
Okay.
And it's then when we start preparing for.
Yes, right.
But if we can get the majority of our people organized and set up and sorted before April, so that they're ready for when their statement comes in, so that they can submit their accounts in October and get not have to pay that penalty.
Yes, I mean, the simplest thing is always to have your business ending at the 31st of March. We don't use 6th or 5th of April. That's unnecessary. 31st of March is by far the best date to end your business each year.
Right, okay. Very good. Yeah. Well, today's been incredibly informative. Thank you, Rob, for coming in, and thank you for DSL. And for those that want more details, you have these 2 ebooks that you've written that they can press on the description below and get access to. Yep. And I'm sure you're going to be helping us in the next couple of months with
absolutely.
people in their books.
I'm happy to do that, for sure.
So thank you for listening today, and thank you for coming on. I hope you've found it informative and you've learned a lot. And we'll see you next time on Financial Freedom for All. Thank you for joining us today on Financial Freedom for All. Join us next time for more ideas about mastering your money and living your dream.